We're back. So I'm going to have to keep going back to the laptop to kind of put us through the slides, but that's absolutely fine. So yeah, so it's a little bit like deja vu for me at the moment. I'm seeing signals out there in the tech space, certainly, that I was seeing back in the day when I was young and stupid and managed to mess up quite significantly. So who am I? So I'm David Murray Hundley. I'm the Grumpy Entrepreneur. The reason I'm called the Grumpy Entrepreneur is that I wrote a book about 4 years ago, which I haven't released. And I was looking for a title. My wife decided that I'm fairly grumpy, so she gave me the title. And people who deal with me in business will generally have seen one side of me when that's probably zero tolerance, and ends up being a fairly grumpy guy. Also, I'm getting old, so by default, you become a lot more grumpier. My background, so I started in tech at the age of 10. I wanted to hack the Pentagon, watched a movie called War Games back then, and went to my dad at the age of 10 and said, could he buy me a computer so I could hack into the Pentagon? Obviously, I didn't do that, but I went on to the age of 11, wrote my first commercial game, which got released on the BBC Micro back in the day. Got a little bit bored with technology and kind of decided that I needed something more challenging, so ended up doing artificial intelligence at university when, frankly, no one knew what AI was. They just thought it was something to do with Terminator. Then decided I wanted to be a racing driver because I thought that's how you made money and you pulled girls. Soon realised that you don't make any money with motor racing unless you're Lewis Hamilton, and girls actually aren't that bothered about it. So decided I need to get a real job. Went to, my first real job was in New York with Chase Manhattan. We built the first, this is obviously the birth of the web, if you like. We built the first online B2B procurement system in the world at the time. Left there, kind of worked for a few startups, tried the corporate world, didn't really do that well in the corporate world, and ended up just at the beginning of the boom, working for a company called Commerce One. Everyone thinks I kind of had that as my plan. It was a complete accident that I ended up at that company. And as I will share, that company IPO'd for 22 billion, and I was part of the founding team at the age of 24. By the time I was 30-ish, I was bankrupt, personally bankrupt, lost the whole lot because I spent my life living in Monaco, partying, basically thinking money grew on trees and that the bubble was going to go on forever. Yeah. Since then, worked for a number of people, built some more businesses, had some failures as well, and up until 2010, a chap called Reid Hoffman, who some of you may have heard of, awarded me European Business Leader of the Year. It was quite good for the ego. I'm not sure it particularly helped me in my business world. And then today, what I do today really, and some of my firsts that I did, so yeah, first B2B procurement solution, which we did with Barclays and Chase. Did the open buying standards, another business that got acquired when I was not even 23. Commerce One, with the biggest stock on NASDAQ for e-commerce at the time in the dotcom boom. We went from literally $17 a share to $900 a share within 6 months, and helped build some technology that's pretty standard out now in the web, and did some other stuff with some automotive companies, and generally pretty exciting times to be back then. Today, I work with a number of companies, accelerators, so a couple of them there. Obviously doing some stuff with Google right now, which we're hoping to kind of heat up this year in Europe. A company called IW Capital, so I get involved in a lot of either personal financing of businesses or actually the kind of companies scaling that need bigger funds. I work quite closely with IW. I even get to spend some time at Ferrari for the last few years, and companies like Borrow My Doggy, which some of you may have heard of. I spent 6 months with them last year to get them through their round and help them out. That was good times. Open are about to come out with a massive announcement. CrowdStacker are doing brilliantly well in the FinTech space, and Brabham up there, if anyone knows motorsport, it's David Brabham, Sir Jack Brabham's son. 60 years this year since he won his Formula One world title, and I'm doing stuff with them on the digital platform side. So I keep myself fairly busy, enjoy what I do, get to meet a lot of individuals, a lot of crazy nutters as well, generally, but I don't feel like I have a job for a living, which is a nice position to be in. So just to be clear, this is my view. okay? I'm not an economist at all. This is purely based on experience. I had a big debate with a guy from Bloomberg the other day about the bubble bursting, and he was kind of talking to me like I was some financial analyst, which I'm most definitely not. So dot-com history. So some of you won't even really know that much about it, but it was pretty crazy times. Basically, I found this when I was Googling some stuff yesterday, and this kind of sums up what the dot-com boom was like. Our biggest problem in the world was worrying about how we were going to be millionaires, which sounds pretty sad these days, but actually that's what we were worrying about, which kind of tells you why the thing went burst in the first place. This guy, still going, because I actually Googled him. He's still got wine business online. But we were basically having crazy times, and none of us kind of knew it was going to end, and we thought it was going to go on forever. You know, I was 24 years old with 48 million in the bank and no guidance whatsoever. And so what are you going to do? You're going to go and be a bit crazy. So the bubble was effectively 97 to 2001. I think there was a lot of VCs that got burnt. We'd probably like to forget about that period of time. Companies like eBay and Amazon literally overnight lost stock price going from $107 a share down to like $7, $10 a share. The references, there was 5 trillion wiped off company valuations with just over a year. And if you had a .com or you were a E something in 2000, basically you got a 1 billion valuation. It literally was the point where I saw companies that had no product, were literally just a website, and they would suddenly have a valuation of $1 billion around them. And investors kind of gave up on the normal metrics of investing. So you'd meet investors who just wanted to be a part of the roller coaster. So everything went out the window. I saw crazy money get pumped into businesses that had no product and were never going to have any product. Just to give you some examples, Boo.com spent $188 million in 6 months, which is quite an achievement. The learning company, which I love this one, you know, sold for $3.5 billion in '99 and then sold again for $25 million a year later. This was normal. There was another one, which was an online bookstore, completely forgot the name of it, who they changed their website and their stock price in 1 week went up 1,000%. That's how bonkers it was. And you look at the markets now, and it's like a 5% gain. You know, I used to sit with Commerce One, and we'd do 30% in one day, and then we'd close and we'd drop, and people suddenly became day traders. The amount of people that I met in 2000 that were, I'm a trader. They all got their little online accounts, sat there with all their cash, and burnt it. And you could actually make a living from it. I bought, you know, it's a true story. I bought my first Ferrari based upon the fact that I was bored one Friday afternoon and played around with some stocks. Didn't have a clue, because it was all guessing. There's some very famous stories of me getting a flight from San Francisco and losing £700,000 by the time I landed back at Heathrow. We did some pretty stupid stuff, and it's no wonder we all went bust. This company, probably one of the worst .com companies at the time, just to give you an example of how crazy the spending got. They invited me to their launch party. They spent $16 million on a launch party. The Who were there, and some band called the Dixie Chicks, who I still don't know who they are. It was a great party, but $16 million. And that was normal, okay? The Super Bowl 2000, these companies some of them weren't even a year old, and spent $2.2 million each on a 30-second advert for the Super Bowl, okay? I can't imagine having a company that was a year old as a startup and going, I know what I'll do. There's a 30-second advert, I'll spend $2 million, because that's really good use of funds. Ironically, I went through the list, and 4 of those companies are still active. The rest have all gone. The following year, in 2001, when the bubble burst, I think there was 4 companies advertised. But that's kind of the extent of the nuttiness that was the .com boom. This company, Commerce One. So I joined Commerce One as part of the founding team in EMEA, and didn't know what stock options were. I remember having the paperwork, actually chucked it on the back seat of my car for 6 months, and then got a phone call the day before we IPO'd and said, you need to sign the paperwork. Didn't really know what I was expecting. We IPO'd at $21. By the December, I think we were $900 and something a share, hit 22 billion market cap. We made one profit one quarter. And we were crazy. And it was like we bought PeopleSoft campus outside in Pleasanton, and we just kind of started believing, excuse my language, but we're our own bullshit. And that company, this is a chart from 2001 when the company tanked, as you can tell. Yeah, we literally overnight went down. In fact, I had some shares given to me on one scheme. I think they were worth 100,000. And by the time the company had tanked like a year later, they were worth like 25 bucks. So it was ridiculous times. Great company though. So that's a bit about the dot-com boom and bust. What's my concerns about the bubble bursting? Well, you know, everyone's got a view on this right out there. But I'm going to take the UK as kind of part of my example. So in London, all right, I like to refer to a certain type of person as swans in London. Swans are those people you meet in the tech world or in the finance space within tech who are absolutely perfect up top, but kicking for their life underneath the water, right? Swans have become more of a regular thing around London in the last 6 months. And these are the people you meet that go, they're using someone else's money to finance startups, and there's not much to them. I meet a lot of swans. There's a lot of swans, particularly around Mayfair. Not giving Mayfair a hard time, but I meet quite a large proportion of swans around Mayfair, which isn't great, but there's a lot more of them. I've seen more in the last 6 months than I've probably seen in the last 3 or 4 years. And I like to think in the UK that we kind of, you know, we spend years and years, I get asked, probably been asked the question since 2010, like, when's the next bubble? And yeah, like I know, okay? Otherwise I'd be winning the lottery every week. But we love to talk about this stuff, and we love all the great stuff, but we in the British, we're kind of like, we stick our heads in the ground when there's a bit of bad news coming up, right? So I like to think we're a bit like an ostrich. We just stick our head in the ground and go, I'm not hearing this. I don't want to know it's going to happen. And I'm seeing a lot of that right now in the tech space. And I'm picking on tech because that's the only space I know, but I'm seeing a lot of companies in complete denial that their cash flow is done, they're not going to raise cash, and they're really struggling. And they're kind of going, yeah, but it's good to be positive. Of course it is. But, you know, I'm seeing that a lot, and that makes me really nervous. But it's not all bad news. So I have a view that there's money, and I'll share this later, there's money to be made in a downturn. So when the bubble burst last time, you know, 2002, if you were based in the UK or in the US, and you said you're in technology, you basically got spat on by people because you'd kind of like used some granny's money for an investment and, you know, left her high and dry. So it wasn't a great space to be in, but there was opportunity. And I'm going to share what those opportunities are. I took advantage of it back in the day, even though I wasn't that smart a guy. VCs are a lot smarter, I think, than they were back in the dot-com boom. I think they've given themselves a lot more margin on deals. And I actually have confidence that actually they've kind of not exposed themselves so much that if the company hits trouble that they're going to bail. Investors are smarter as well. I think the dot-com boom, you know, you just assumed if you put £1,000 on something or £10,000 on something, it was going to multiply by like a gazillion, you know, in a month. The reality is now I think investors are a lot smarter. There's a lot more access to information. And what I think the upside on that is that they will support businesses a lot more when there are sort of troubles ahead. And we need a shake-up, frankly. I just had a meeting with 2 guys before I did this, and it's noisy out there. And I'm going to share with you my view on that. But there's a lot of noise in the space at the moment. And actually, if you look at what happened before, there was some companies that got really challenged. Take Cisco. I think they lost 80% of their stock price. But look at Cisco now, right? I think it's a positive thing. Not obviously if you invest and lose your money. That's not positive. So this word, I hate this word, unicorns. It's just like, it drives me bonkers, okay? The fact that even Google say it's a mythical creature kind of tells you a lot. So obviously we've got 1 billion unicorn, 5 billion unicorn, and then we've got 10 billion unicorn, okay? These guys have to IPO at some point, and I'm going to touch on it. The market's not particularly great at the moment. But I get really nervous that all it takes is for one of these, and there's a particular large firm out there that we probably all know and we use to get home at night, that when it IPAs, what the hell's going to happen? And it's stuff like that that will trigger just an avalanche of negativity in the space. So that really concerns me right now. Unicorns really concern me. And also because we get so focused on it. I saw a thing come out for Tech City last week, big diagram thing about how great London is, although I like to think the UK is quite good. And it was like, we've got X amount of unicorns in London. And I'm like, is that all we focus on? You know, that's pretty risky stuff. Torres Capital. I don't know if anyone knows of the term Torres Capital, but basically, generally what it is big investment houses, hedge funds, banks will put large amounts of money into like really late stage companies. So there's actually quite a lot of that capital around at the moment. They're jumping in on people like Uber. They're jumping in on all these guys that are about to go public this year. What I am seeing though is there's money there. I'm not seeing money lower down the stream now. I'm going to touch on it, but I've seen some companies really struggle. Good companies really struggle to raise money in the last 6 months. The trouble with Torres Capital is that these guys aren't specialists in the area, right? They just see that some guy over here is earning a ton of money, right? I've got to get in there. And they push some serious valuations up on these businesses, right? And so when they go public, it's great. All it needs is for one of these guys to get burnt. And the rumors are the US, that will happen by the end of the year. So, you know, if you're in a final kind of late stage business right now, get that money now because it's probably not going to be around at the end of the year. The reason I'm kind of pulled this up is that 2 years ago, that money was a lot less than it is now. So you kind of say, well, that must be good, right? There's more of that about. It's because the guys are going, this is their one last chance to get in on this particular peak. So I'm seeing that a lot at the moment. Arrogance in business. So I have a view that you have to have confidence, and I have a view that you need a little bit of arrogance to kind of drive businesses forward and be successful. But there is different levels of it. And one of the things I'm seeing, and there's been arrogance in the tech space forever, but the kind of concern I have right now is that when I saw this arrogance level before, it was probably early 2000, and people really, really started to think they were like Jesus Christ or something. And I was one of those people, so that's why I identify with it, because I'm like, wow, they're the idiot I was in my 20s. It's a real worry, and I'm seeing it on different levels. So I see it in the startup space with really new companies, and people going, yeah, but I'm going to be all right, and I'm doing this, I'm not going to listen to anyone because no one knows what they're talking about, etc. And I can literally stand there and go, car crash waiting to happen, 6 months, which is, I try and give my advice, but I'm watching it happen, and I've generally seen those people come back. The other side of the arrogance I'm seeing at the moment is the good old valuation conversation. People really, really, really believe in that they're maybe pre-revenue or they've just made some revenue and they're worth 30, 40, 50 million pounds. Which just is not the case out there. And I love these people who do that because they never kind of actually raise the money, so they just end up in limbo. It's getting really bad. In fact, I was at an event recently last week that I was shocked at the arrogance in some businesses. And I'm even seeing it on deals. I saw a company recently get an acquisition offer. Good deal. And I would have taken it. The arrogance of the founders was absolutely shocking, and so arrogant that they spent 6 months being arrogant on the deal. Deal walked away, okay, because the guys they were dealing with weren't idiots. And I'm seeing a lot of that. I'm seeing people literally just kind of believe everything that they do right now. Last time I saw that bad, it was 2000. Respect for money. So I have a view that everyone's really good at burning everyone else's money in business, okay? I've generally been the guy that they've burnt the money for. I used to be the guy who used to burn the money. And I could talk about this subject all day, but one of the scary things I'm seeing at the moment is that people don't value 10 million and they don't value £1 at the moment. Okay, so I get my textbook thing I get from people is, yeah, but you can afford to lose it. Now, my wife's probably watching this right now. I think she would probably disagree. And then like time. Oh yeah, but it's okay because you've got time to do this and you've got loads of, you're sorted, so why do you need to get anything out of the deal? It's like, well, I didn't get to that point by kind of giving everything away for free. Burn rates out there, shocking on some businesses. And I've had a few companies recently that have come to me via various channels and they've said, well, we're raising money because we're scaling the business up. We've been going 3 years, making revenue. The burn rates on those businesses are ludicrous. And last time I saw that, yep, you guessed it, was back in 2000. To the point where they go, well, we've got the team now for 5 years' time. So we've got them, we're ready to go. I'm like, well, that's great if you actually survive until 5 years, right? It's really, really bad. And there's a real attitude of, I've seen one of the things kind of disappointed me this time around is that, the investors back in 2000 kind of just gave you a load of money and you went off and did your thing, and there was kind of this expectancy that you just, someone would do a magic wand and the business would IPO and sell some stuff or whatever. What I'm seeing a lot of now is people not sticking even to their business plan. So investors are a lot smarter this time and they're giving them a hard time. But I am literally watching businesses in the last 6 months that are just, yeah, well, we're going to kind of do that and now we're doing this with no agreement, right? Which is the last thing you want to do. But it drives me nuts that people just don't respect the fact that, this is people's cash, right? And I'm even seeing companies do it with their own money, the money they've put in themselves. So I did this search. So I have a view that I can't sing, okay? So I've got a 2-year-old daughter called Harriet, and when I try and sing, she basically goes stop, and if I carry on, she goes stop, because I am rubbish at singing, okay? So I don't go to X Factor and stand on the stage and sing and get booed off stage. I just don't do that, all right? But I know I'm quite good at tech, and I'm quite good at startup businesses. So 2012, and I love the fact that I come up top on the search engine above Simon Cowell, which is probably the only time I'm going to ever do that. But I wrote this article in 2012 that after being at the Web Summit in Dublin and came away from the Web Summit and went, wow, it's like X Factor. It's like someone just kind of thinks they can sing, so they've got their own business and they're just going to ramp up and it's like, yeah, it's all great, it's really easy. Now, as we all know, it's pretty damn hard, right? And I also think you're either an entrepreneur or you're a corporate guy, and those skills are, I can't work for a corporate because I don't like people telling me what to do, okay? I'm a bit of a maverick. But I wrote this article saying that it was becoming, I'd spent some time at Tech City that year, Web Summit, I'd kind of done some stuff with Enterprise Island, and I was shocked by that mentality of, I'm going to turn up and sing on stage. It's got really, really, really bad. So I look back, I reread this article yesterday and went, wow, okay. Again, some events I've been to recently, and I've seen just the sheer, there seems to be this attitude of, well, tech's a great space to be in, so therefore I'll quit my job as an architect, which I was really good at and probably really naturally ability at, and I'm going to go and do something in this space that's completely different because, someone's told me it's a great idea. And so that's becoming really apparent at the moment. And I get probably 20 business plans a day. That number's probably gone up at least 50 to 100% in the last year of just the sheer number of business plans I get. And everyone thinks they can sing, all right? And they need a 2-year-old daughter to go, no, you can't. So this one is really, how many of you are raising money at the moment? Okay, that's much as I thought. Okay, and the rest of you, so how many of you are kind of early stage businesses? Okay. So the guys who are raising money, it's tough, right? So it's tough?
Yeah, just started, but yes.
Yeah, it's tough. And you guys have got track record, right? Yeah. So, yeah. So I've been around 3 deals in the last 6 months where they've been raising money. So these guys are kind of Series A type money. So probably between 1.6 million to 7 million. And they're two-year-old well, two of them are two-year-old companies and the other one's a three-year-old company, making revenue. Okay, some of them have quite high burn rates, but they're making cash. They've got products out there. They've done some great stuff on positioning. They are, if you look at them, they are great businesses. Sadly, flying by the pants of their seats in terms of cash flow, literally on a month-by-month basis, which is never good anyway. But what's been really, really apparent is that a year ago, or even a year and a half ago, they would have had people lining up to invest in them. If I told you all those three companies, I'm not going to name them, but all those three companies had one company actually willing to invest in them, and proper tough terms. The terms I'm seeing at the moment are frightening. You know, it literally is the point with the business where you're going to go under because you have no longer any cash, so job done, or you basically, like the cartoon says, do whatever they say. So I'm seeing investors really tight on like 100% liquidity. These guys don't want to be diluted next round, and they're being really tough. Bad lever, good lever clauses, like you wouldn't believe. Basically, you are their slave for the next 100 years on that business. And so it's really tough out there. And that's on companies that are making money and doing well. The other side of it as well, I'm seeing like on seed financing, I think that's really quieting down. But people are going, yeah, I'll give you 500 grand, but yeah, I want 70% of your company because it's so high risk. It's tough out there. And the deals are really, really tough. Valuations, good old topic. Valuations on companies that you would think would have been £20 million companies, in one sense, are actually £4 million companies. And they're really challenged on it. I think a lot of people have already been burnt out there at the kind of 1 million, 2 million stage, and they're kind of getting very, very nervous. The other thing I'm seeing as well, which is never any good, and this is a piece of advice, founders that have taken some bad money a couple of times, and their position within the business in terms of equity is so low, it kind of makes a deal unattractive as well. So I've watched one business recently where that was the case, and you kind of get to the point of going, well, I want the founder around, right? Because I want to own them for the next 10 years so they don't run from the business, and etc. So yeah, it's tough out there, and it's tough. This is March 2000, I would say we are at right now. Yeah, if anyone's raising money this year, like the best of luck, because you're going to kind of need it. Startups being acquired. So I've been really fortunate that two companies I've been involved with from 2011 and 2012, in the last 4 weeks have both been acquired. Kind of didn't expect that to happen. What's interesting though is when you read about these acquisition stories and there's no number mentioned about how much they paid. Okay, so here's a little hint. That generally means the company was probably screwed, okay? And the company was like, can't raise money because it's super tough out there, so I know what we'll do instead. Oh, we'll say we got acquired, right? The two companies I'm talking about are actually, they did mention the number, but you'll see suddenly a lot of acquisitions happening in TechCrunch and Mashable and whatever else everyone reads. There are companies right now going, holy smoke, like what do we do? And they've got no bargaining power. So expect to see that quite a lot. I'm also seeing a lot of acquisitions happen because initial investors have got fed up. So literally forced them down a certain path. In fact, I knew one quite publicized acquisition that happened last year here in London. I knew the boys from their first day. And it was all lovely in the press, isn't it really great and positive? And I know for a fact that the actual paper that they got was not worth half as much as what was said in the press, and they were forced into a position. Okay, but obviously they didn't tell the press that. That's pretty common right now. So expect the next 6 months to see a lot of acquisitions. The IPO market. So this is really interesting because if you read some reports that have come out in the US, they kind of, they don't all necessarily agree with each other. But what was very apparent about last year was it wasn't a great great year for IPOs. In fact, it was 2009 level, which is obviously when we had our last kind of major challenge. There was only 2 mega IPOs. So by mega IPOs, obviously over 1 billion, one of the unicorns. Loads of companies in down rounds. So this is what really worries me about the bubble. I'm seeing companies that the valuation's been pushed so high, like so high, that they're going to go public for less than their last private round. So there's a new, I don't know if you guys have heard of the Jobs Act, it's come out. So there's a kind of an opportunity for these companies that were looking to go public this year to go and re-establish what they actually should be putting themselves out on the market for. So that hopefully will mean there won't be a massive kind of downturn of businesses kind of not either going public or going down the tube. It should actually protect people. But I also have a view that I was reading somewhere, actually the guy from Bloomberg who was challenging me said, oh, well, there's less IPOs. But actually, I think it's a good thing because IPOs in the dot-com boom, it was like, your corner shop was probably IPOing on the NASDAQ, right? And the guy cuts your lawn, you're like, wow, you're IPOing your lawnmower? It really got like that. And I don't think it was good for the businesses. I think it was good for the banks. It was good for the investors. I actually think the IPO market in the dot-com boom was not that good for those businesses, to be honest. So actually, there's maybe more quality. And actually, we've been a little bit more guarded about it. So I actually think it's a positive thing. Sadly, though, the gardener won't be IPOing his gardening business. There's nothing wrong with gardening, by the way. So what's the opportunity when the bubble bursts? So I kind of have a view that... Let me share with you what I see as the opportunity. Cash flow, right? There's a lot of businesses out there, and I've been approached by 7 companies in the last 8 months to loan them money for their cash flow, effectively bail them out, okay? So they can go and raise funds, or they can change their plan for like 6 months and kind of be their heads above water. So for me, I lend 100 grand there, I lend 200 grand there. I'm not going to make interest on the money. So the opportunity is stock options on the business, right? That I can exercise in the next few years. So I see that as an opportunity. It's not very great for the business, but for me, it's kind of like, okay, that's cool. I've also, when the companies, there's some great businesses out there that are going to sadly not be around. But that doesn't mean they're gone forever. So there was a company back in the dot-com boom called Utility One. And when I was bust, my chairman, who'd got out at the right time, and I basically picked up this company in the US. They'd spent $600 million on development of the product. I don't know who they were employing, but they must have been paying them like $2 million a year each. And we picked up this product, literally paid nothing. I think we paid $1 for the legal stuff on the paperwork, deferred payment on it for 2 years, and did some, painted the windows, did all that kind of stuff that you do with businesses, and then flogged it. So there's going to be a lot of those opportunities. So the only thing I would say, if you are in that kind of really early stage, is kind of just have some patience as well. There's going to be some good opportunities out there. I think there's also going to be a lot of businesses that will look to partner up a lot more, okay, and share, back to the old outsourcing model, kind of share things. But I also think it's a great opportunity if this is your first time to go through the bubble bursting, to kind of learn, right? Because then you get to be an old git like me at 42 and go, oh yeah, I see the signals, all right? And you know when to exit and get out. So what would I suggest right now if I was a business? I went to this event last week and there was probably 90% of the room was like people with ideas or literally going for seed funding. And there's a chap over there that was in the room. And I think I probably upset everyone's evening going, I wouldn't want to be starting a business right now. So I'm going to try and be positive on this one. Hang on. So one of the things, while we're doing that, cash is king, okay? So a business that just raised a load of money with me, my words to the founder was, change your business plan. Get the shareholders on board, change the business plan, and basically get cash. Stockpile cash, put cash away, make sure you can deal with a really bad storm if it happens, make sure you can, you're not worrying month to month And I'm advising that to a lot of businesses at the moment. I'm even doing it myself on a couple of businesses, okay, because cash is king. The other thing I'm saying as well to people is, basically, is it froze? Okay, is, review your business plan. So if your business plan said to raise money at the end of the year, you might want to rethink that strategy because it's probably going to be either super tough or possibly expect it not to happen. So I work with a lot of companies where they already know where they're going to do their next round. I think those days are going to be challenging. This one drives me nuts. Okay, talk to your shareholders, talk to your investors. Okay, I see a lot of companies that kind of get suddenly scared. When it's all great, they're all like, yeah, we chat to our investors and shareholders and that. But when it goes a bit ropey, they stop communicating with them. And then you have a guy like me going, what the hell's going on? All right, and I'm then having to find out. If you keep those guys on board, I can promise you investors are a lot more supportive now than they were back in the dot-com boom. I think they absolutely want these businesses to succeed. They want to see you change the model. They want to see you make money, but they actually will support it and they will cash flow it as well. Okay, yeah, you might be a bit uncomfortable, but keep them sweet. If you're offered an exit, I did an article a couple of weeks ago and someone described it as take the money and run, which I didn't exactly mean. I'll give you an example. So I have a guy who I've known, he was my first boss at Chase, called Kevin Doyle. And Kevin had a business in '99, which he sold to a company called Infobank. Infobank was the biggest stock on AIM listed at the time. And they had loads of money, right? They were just throwing it around and kind of, he always jokes that they paid him an awful lot of money for a consultancy based in Tring. And he got a nice chunk of cash from it. He left when the rise was going. Literally, everyone thought he was bonkers. Everyone thought he was crazy. The business started, markets started doing that. And he had people going, oh, you're an idiot. Obviously, 6 months later, that all ended. Those people ended up with very little. Kevin, on the other hand, still had all his money. Had quit, got out, just went, and a year later was buying the same company back that had bought him out, which is kind of ironic, because they were sat there on AIM, and he was like, yeah, I'll take you over. So, he kind of was the person that actually taught me to actually just get out. And I was saying to someone recently, how much money do you actually need, right? So we all kind of bang on about the 100 million or the 50 million or the billions or whatever, right? And they're rare. As someone, in fact, a very senior guy at Google was chatting to me a couple of weeks ago. He's a good friend of mine. He said, you're not going to be the Facebook. You're not going to be Apple, right? You're going to be down here. And actually, £1 million in your pocket in your 20s, that's not bad, right? So go and do it, okay? I would honestly say if anyone's offered an exit on something, even if it's a modest one, take it. Do it. Go have a nice life, okay? Because you're going to do it again. I have a view that once you've done it once, you can do it multiple times. And then companies that make money. So figure out how to make cash. So the companies I invest in make money. I don't do much pre-revenue because it's just too risky these days. But I like companies that make, I don't even care if you make $10. Just show you can make money. And this is going to become more and more important, okay? So just have a think about how do you keep those costs down? Be a slave to the pound, yeah? Just, really, really have an understanding about how you can make cash, real cash long term, and you'll be okay. And that's what I would do right now. And I wouldn't get too nervous. I honestly think that it's not going to be as bad as before, but you need to be smart and not be the ostrich with the head in the ground, or talk to the swans in Mayfair. So yeah, that's kind of it. It was very quick, but that was it. And so thank you. But do we have any questions? Yes.
All right, thank you very much for that. Very, very interesting.
You're welcome.
The first question I have, and I have two of them, is what do you think will trigger the crash? That's the first question. And the second question is, do you think there is a lag between what happens in the Silicon Valley, which then there's, in my estimate, is 3 to 6 months to come to London, and then 3 to 6 months to come to Asia.
Mm-hmm.
Do you agree with that? Or?
So your first question, I think it'd be one of the unicorns that triggers it. And I think that could be in the next 3 to 4 months. I think that would be when everyone starts panicking. It's interesting with the media over here at the moment. They're kind of shielding away some bad news in the US. on bits and pieces. Yeah, if you go into the US media stuff, it's kind of, it's there, but I think everyone's worried about creating panic. On Silicon Valley, it's interesting you say, do you say 3 months? Yeah. So there's this rule that everyone has this view that, UK is 3 years behind, right, on stuff, okay? I don't think that's necessarily true. San Francisco right now is having a really tough time. So if you speak to people over there, it's 2000. House prices are ridiculous. I think you can't even buy anything in downtown anymore. And everyone's expecting them to drop 50%, 60%, which is what happened before. I'm talking to people out there that I know from the first time out there, and they're like, people are getting made redundant. There's been companies that IPO'd that are folding up. So it's pretty bad out there right now. I don't know if it's 3-4 months, but I think it might even be quicker than that. But right now, it just takes, there's a lot of eyes on the IPO market, right? And I think they've had a bad January and February. So it might be that unicorn that causes everything to kind of crash. And obviously when the money dries up, right?
Yeah.
Cool. Hi.
Hi, sorry if you might have already mentioned this, but do you think there are particular industries that are the worst offenders when it comes to kind of triggering the whole
Yeah, the finance space.
Yeah.
Do you know what? I love tech, and I love tech because it's so rapid, and it's not 3 years to get stuff. It's like 3 months or whatever to kind of come over here into Europe. But we are pretty bad sometimes in the tech space of overhyping. And there was a period about 2-3 years ago where I saw like a normality around, people weren't making crazy predictions or crazy statements about what their business was going to achieve and that. And we've got really bad at that again. I was reading something about a US company. I'm not naming people because I don't want to get sued. But I was reading something recently about a US company and just complete BS, and now they're stuffed and they've like blown some serious money. So I think we don't help ourselves in tech. I think the finance space as well has been interesting. And there's a bit of a government thing. So I had a joke with someone last year that when I was in tech, in the dot-com boom, the government didn't even know what tech was, right? Okay, so like if you used to go and meet, like I used to do at Commerce One, we'd go and meet MPs or whatever, and they were like, so what do you do? Right, there was like just no understanding. And obviously I'm part of Level 39, and it can be quite political. And then suddenly I described it last year like, we're suddenly like the baby that the Prime Minister wants to hold a little bit. I'm not sure he's going to appreciate me saying that, but I think, that hasn't helped either. And I think there's been a real hype around FinTech, obviously. I have a view on that some of them need to start delivering, and they're 2-3 years down the line. I'm like, what have you done? And also because the finance space, it's by default, it's tough, right? And you can see the FCA being really tough on the finance space in tech. But what worries me is that, to answer kind of the gentleman's question there, I'm interested to see what happens with the crowdfunding space this year. I have a sneaking suspicion that the shit might hit the fan very quickly, and some companies who possibly were more interested in numbers because they're getting pressure from the shareholders than the actual deals they're putting out there, that might all start happening to come up in the press. Because as soon as Granny puts £10,000 into what she thinks is going to be the next Facebook, and then she's going to be disappointed from 3 years ago, that's going to be an interesting one for the UK, I think. Hi.
I was going to ask was that me? Sorry.
No, you can go first, Mark.
Okay, sorry. I was going to ask that question the other way around, if you see any underlying industries that might have more potential. I think there are some interesting things going on in the health sector, dusty things like education, tech sneaking in there. Do you see any?
Yeah, so health, I love the health sector, right? I have a business involved with the NHS. I love it. There is always interest in that space, yeah? So even if you look at the last time the bubble burst, there was the pharma companies and the health sector that were kind of all right. Everyone's talking about insurance a lot right now. I'm getting a lot of business plans to do with insurance technology. So everyone seems to be talking about that space quite a bit. And still pharmaceutical, tech and pharmaceutical, which is always the normal culprits. But it'd be interesting to see what happens with some of the BTC type space, I guess. So,
you said A rounds are really hard. You don't invest in things that are sort of pre-revenue. You want to comment about the SCIS space, because there's lots of us raising a bit of money and a bit of MVP and a bit of revenue. Yeah. What do you think our chances of success are?
Yeah, so that's not, SCIS is still really interesting for people, right? And I've kind of always had the view I invest in companies because I want them to succeed and not kind of get a tax write-down if they don't. But it has to be, one thing the government have done really well was introduce that, because the company actually, one of the companies I said that was struggling to raise money, they raised money because of SCIS. Yeah, so I think that's going to help people, but I do worry that the people at the kind of 50 grand, 100 grand space are going to kind of get tight pockets suddenly or get very nervous. I'm seeing a lot of, I hate the term angels because I'm not sure who are the real ones, but I've seen some that have over the last 5 years been investing money and they're getting quite nervous about returns on it. So yeah, it's going to help. Hi.
Hello. What do you think about ad blocking, and do you think that these kind of things going on with the advertising industry would be revealing some opportunities for startups, or would be just a little bubble of advertiser against ad blockers?
Blimey, not one of my subject specialities. We were just talking about advertising, actually, in the meeting beforehand. I kind of have this view, right? Advertising is around, right? And I think we get really, I see a lot of businesses try and reinvent advertising and whatever. I was actually using ITV as my example. So ITV years ago kind of had real challenges as a business, and then Adam Crozier came in and they've just had this 1 billion turnover, I think, like in their numbers have just come out, and yet a few years ago they were near enough going bust. I look at someone like Google, who everyone goes, oh, Google's this big company that does this. At the end of the day, it's a search algorithm and they make money from advertising, right? So I think it's not going to just be a blip. I think there will be something there, but I don't know enough about the subject to kind of really go, yeah, I can kind of predict that. I'd probably be wrong anyway.
So we haven't actually tried to raise money yet. I mean, is your advice literally go hell for leather before the end of the year? And
Yeah, I think it's interesting actually. There is cash around, not necessarily in the UK. So I was chatting to someone in Toronto a week ago, and they're kind of almost like 2 years behind us in a way, in terms of where they are in the cycle. So they're looking at like accelerators in the UK and like value add type businesses investing money, and they're kind of 2 years behind, going, oh yeah, we want to do that model now. Actually, not even 2 years, probably 3 years behind. So there is cash, and they're telling me that New York's a challenge, but basically over the border, yeah, there's cash around Canada, and also, the Canadian government have done a ton of stuff around tech anyway. So there is money out there, but yeah, I think what's been interesting with the reason I kind of talked about the accelerator thing is that I know a number of accelerators here in the UK, and they're really like struggling now. So the ones that get financed by other kind of sponsors, if you like, whatever, money's drying up. And they're looking for deal flow almost. I've had a number of emails in the last 4 weeks where they're almost like having to sell for once, which they didn't have to do before because it was just walking through the door. So I'm seeing that a lot. So there is cash. There's a friend of mine who is actually the CEO for IW, Luke. And one of the things Luke said, they're happy to do pre-revenue stuff, but there has to be real, like, very obvious that company, is going to make cash and it's not too high risk, but also that the expectation is massive. So you probably can get some cash, but it's going to be a tight deal, would be my thing. But yeah, I would go hell to leather anyway. I mean, you should anyway, right? Yeah. And I think, your term sheets are probably going to be a little bit tough. Hi.
So if you were in an early stage startup, so what would you do? You don't have cash to scale your business. You don't have that much cash to empower your product.
Well, you can. It just might take a bit longer. So I used to be in my 20s. I used to think that money kind of solved the problem of building a business, right? And it does to a certain extent. It accelerates. But actually, I've built some businesses recently in the last 10 years, okay, where I've taken the organic route and I've taken the slower route and definitely the more challenging route. But I think you can do it. You know, the guys I look at before, you know, not everyone got burnt in the dot-com boom, so there was companies that did stay, and they just learned to organically move the business forward and just take a slower pace, right? It's like being the tortoise and the hare, okay? My great analogy is that Commerce One, which we know we were billion, whatever, there was a company called Ariba who got bought out by SAP last year, and Ariba was our competitor. But Ariba took the attitude of, well, we'll be half the market cap, right? And we'll just take the long-term view. Right? Well, they're still around all these years later. They got acquired by SAP last year for a massive amount of money. You can do it. I just think what also might happen as well that I saw before is people clubbing together. I think one thing we have got this time is a bigger community. You know, there's a lot of fake people in that community, but I think there's some really good people, really talented people that will go, I'll help you get your business forward, right? And they will spend the time on the basis that they're probably not going to get much out of it at first. You know, people have got quite greedy in the last few years, whereas there was kind of a hippie mentality, you know, 8 years ago, 6 years ago, like help each other out. So that might be your way. I certainly wouldn't say stop. I also have a view, fail quickly, right? So if you're going to fail, don't waste your life, kind of go and do something else, yeah? Because one of the things I've always said to people is that the day I went bankrupt, I said to a judge, the judge said, you know, how much can you go and make now? Because I'm about to bankrupt you, David. And I was like, yeah, I'll be all right. And that's pretty arrogant. But I was like, yeah, I'll be all right. I mean, it's a bit shit, but yeah, I'll be okay. I'll survive. I've done it once. But yeah, you should keep going. Hi.
Hi, there was something, it's just a personal observation. I came out of LSE when lots of my fellow grads, and the guys who graduated probably 10 years earlier, all of them went to banking because it seemed to be cool. Then after 2008, all of them kind of stopped doing banking, and all of them
Wonder why. Yeah.
So all of my older friends, all of them are trying to develop an app.
Right.
Each of them is trying to break through like a new strategy for something.
Yeah.
Right? Apps for absolutely everything.
Apps for apps.
Delivery services, an Uber for hairdressers,
Right.
an Uber for handymen who assemble your flat
Yep.
furniture, right? And there are apps for everything in every type of space, and I can see more and more coming. And then I was really suspicious of it, and now I'm working on an app, and there is something really strange going on, and I can see that it is a bubble, but how can you change people's mentality? I mean, it's like a virus. Everybody first wants to go to banking, then everybody wants to build an app, and then what's going to be the next thing? I really don't know.
Yeah, well, they'll probably go through the cycle again, and then they'll go back to finance. Yeah, I mean, interestingly enough, actually, the guys who came out of finance into the tech space, there's actually been some really smart people. I've seen, because they've been great at raising cash, number one. Yeah. But there's been a couple of others, actually. I was chatting to a guy yesterday that I mentored out of the charity I'm involved with, and he came out of Barclays Capital, did a little business, sold it for a modest fee. He's now back involved in the finance space, you know, and you could tell there was just that mentality. But it's a bit like it happened in 2000. So I remember everybody was a web designer in 2000. Everybody was a web designer. Because it generally to me meant you're not very good at anything else, okay? And you did a self-taught course that you probably spent an hour on, and your idea of a website is probably not my idea of a website. And that kind of happened in the app space, right? A little bit. And what I saw was everyone going, so David's driving around in a Ferrari and he's 24, living in Monaco. Yep, want a piece of that. And the same thing, telecoms industry, which was massive at the time, like people were just flocking in. And then when the bubble burst, because they were kind of late in the game and they didn't get the returns they wanted, some of them kind of stuck around, and then the others kind of like buggered off, right? And went back to doing their job of being an architect or doing whatever before. And that happened again. That's why I called it X Factor, because there is this thing about, wow, I read it that this guy called Mark Zuckerberg, he's worth X amount. Oh yeah, I need to do that, right? And the interesting thing is that I had a conversation, so I don't know if you guys know who Reid Hoffman is, but Reid Hoffman is, he founded LinkedIn, he was part of PayPal, eBay, Greylock, the investment side of stuff, whatever, right? So he's worth X billions, etc. And the first time I had a conversation with him in 2010, we talked about what his motivation was. And he said, I'd never done anything for cash. It's always because I want to change stuff. Yeah. And I think we've lost that a little bit, that people see the pound sign. And I tell people when they do businesses, don't do it because of the pound sign or the dollar sign. Do it because you want to do it. Commerce One, right, which was my proper real big win, if you like, in my 20s, I never knew I was going to make that money. I did it because I loved the technology. I did it because I loved the company, the people. Still do. But I did it for those reasons. So I think what's happened is that you're right. People just kind of look at it and go, that's kind of the hot topic right now. And I don't know what they'll go into next. They'll be back in tech at some point.
So another hot topic. I was previously working with, I'm still working with FinTech. Any types of trading platforms and information aggregators similar to Bloomberg, but each platform say that they're different.
Everyone's different.
Because they are getting information which Bloomberg can't get.
Yeah. I mean, goddamn Bloomberg and Reuters, right?
With 4 different companies, and each of them wanted to sell data, and all of them were FinTech. Because there is so much data, but we are the best data aggregator.
Yeah. Yeah, I kind of think Reuters and Bloomberg are obviously quite smart companies, right? Been around some time, spent a lot of money, having worked for Reuters at one point. Yeah, I find FinTech, we banded it when it got mentioned in the budget a couple of years ago, and George Osborne was talking about it. I suddenly went, oh, here we go. Everyone's going to be jumping down this scene now. And, obviously we're based at Level Fed 9, we're based at Canary Wharf, and Eric, has just left, done a fantastic job. But there's been this, the golden nugget that the magpies go into. And that's the other thing we do in tech as well. I find we'll have the sheep mentality, that we just kind of all follow one area, and there's kind of a lot of red herrings in technology, as I've found out, and actually keep it simple, and the stuff that isn't obvious is generally the stuff that does really, really well. But yeah. Hi.
Hi. You mentioned health, insurance, FinTech. There's lots of stuff happening right now. Is there a space where that you think is being overlooked, where you'd like to see more companies and companies that they're not startups?
There's not enough startups out there getting recognition that solve simple problems. So I love Borrow My Doggy. I don't know if anyone's used Borrow My Doggy, right? But this time last year, I'd never heard of Borrow My Doggy. My wife had, and every other female I spoke to seemed to know it. And I seem to be the only guy on the planet that had never heard of it. And I love the fact with businesses like that came out of a fact that Ricky is the founder, couldn't have a dog growing up. Okay, moved to London, walked someone's dog, sat down with someone from Seed Camp as it happened upstairs, and that business is now doing X turnover or whatever. And I think there's a lot of businesses like that get overlooked, that solve really simple things, right? And the uplift being that, that solves problems in families, about arguments around dogs and all this stuff, and I think there's just some great stuff. So I like things like that. I like stuff that helps charities. I know it sounds really cliche, but I get really annoyed at some of the big platforms out there that we all use to get sponsorship for London Marathon or whatever, and a chunk of money doesn't get to the charity. That annoys the shit out of me. So I wish we were doing more stuff in there, but it's not attractive to people because it's not FinTech, right? It's like, yeah, I'm going to go to the pub and say I've got a charity app, or I'm going to go to the pub and say I've got a FinTech app. I think automotives I'm finding really interesting at the moment because it kind of got overlooked for a bit, and I think that's going through a massive change right now, and so that interests me, and I love some of the stuff that's coming out. But it's on the health. I mean, health for me is, if there's companies out there that can help the NHS save money and patient care, then I'm all for that. I love that type of stuff. Hi.
Hi. What stuff do you love in the car industry?
So I'm a petrol head, right? I grew up in the motor industry with my family. So, you know, my perfect job would be CEO of Volkswagen. I know everyone thinks that's crazy where they are positioned right now, but that would be, I grew up with that brand, you know, because my dad was involved with them. So I would love that. But what I'm loving at the moment is the transforming the way we kind of interact with cars. So someone from Google 2 weeks ago went, your daughter will never drive a car properly, right? I wanted to be Formula One world champion. That might not even happen. And I was like, wow. And in fact, I was just having a conversation with some guys who are looking at virtual reality. And I'm thinking, you know, what are we going to do in the car if it's driving itself along, right? We're going to get bored. I mean, I get bored anyway. So I love some of the app stuff that's coming out. And I love that actually the fact that the car manufacturers, who are quite arrogant, all right, are actually engaging. And I was with a company last week, a guy called Eric, who does all the charging stations for electric cars. And you're talking to a guy who loves petrol. Not, I don't drink it, but, you know, I love petrol. And I love the environment, but I also love cars. And he was telling me that, you know, 2% of the car population in the UK is electric cars. But that's been done in like 18 months. Norway is 20%, right? Because they've done certain levies on gas guzzlers. But I think it's fascinating. And I'm doing a talk actually at UBS with Tesla and this company. And I'm going, we're really changing the space. So I look at my daughter and go, wow, how is she going to interact with a car? Like, is it almost going to be, I don't know if you've ever seen Back to the Future 2 when he goes to play that game and they go, you've got to use your hands as a baby's toy. I think Back to the Future 2, like, sorted all tech out anyway, right? But I love that bit where I'm like, wow, my daughter's going to look at me and my car collection, which I'm going to be really proud of, and go, hey, there's your inheritance to sell and buy a house probably or whatever. And she's going to go, well, I have to start it? I have to do this? Like, what are you doing? And I do wonder in the automotive space if we're about to hit a kind of horse and cart transformation, because everyone used to think, yeah, I'm sure there was a guy back in whenever who thought horse and carts were brilliant. And it's now become kind of secondary. So yeah, I'm glad to see the automotive space is actually, and the automotive manufacturers are engaging. And I think there's some great stuff going on out there. And I think they're spending a lot of money. If I was doing a startup right now, I'd be looking at that space. That and AI. I love artificial intelligence, which is actually becoming the norm now, not just Microsoft Office changing it in 1995. Any other questions? Hi,
just
again.
Train of thought. If corporate finance does dry up as you, or investment into startups does dry up as you predicted and warned us about, do you think there might be a chance that on the political side the government might try to come in and not close the gap but might help with incentives to make sure that places like London stay at the forefront?
Yeah, I mean, I don't think they'll do what Ireland did, which is literally give money away. I don't sure that particularly helped them. But I think they will support things like match funding, which the Irish did do, Enterprise Ireland did do. I could see that happening because there is a willingness out there. I know a lot of very wealthy people that are willing to match fund on stuff if the business needs sorting out. I think what they should do is go, right, okay, we're happy to kind of plug the gap a little bit, but you need some serious people in the business to turn it around. And that's one of my nervousness that I have right now is I talk to some founders who are, and I'm not an ageist person, but they're late 20s, early 30s, and you can see the experience level isn't there. And you know what? It does count sometimes, right? Because you've got a guy sat there who can go, well, actually, this is what's going to happen. Cash flow is what's going to happen to your business. So I wonder if there's a way that they can kind of not bring in a business link London like they tried to do a few years ago, which was, frankly, not that great for anyone, but actually kind of plug the gap, but with experience as well, because money's just it's not just about the cash, right? Sometimes it's just they need people in there to go, okay, so you need to raise $1 million, you can't raise it, but we can do it for 500 grand, and actually let's just reposition the business this way. So I'd like to think they have, because the government's taught, you know, they've used it for elections, right? So let's kind of see them deliver on it, but I don't want it to become a bargaining tool either, which is what I see happen a lot. I think we're good. Oh, one more.
Do you think there's a difference between software and hardware? When you talk about money drying up, is that only software, is it hardware as well?
So interesting. Hardware, never gets a look in, right? Because it's kind of like, oh, it's infrastructure, it's a bit boring, right? I had a business plan last week, actually, for a hardware company that are doing stuff around fiber and some other bits, like amazing stuff. I actually said to the guy who sent it to me, I went, the problem is your investors won't understand it because it's kind of like, whoa, way out there. And I think with software, people can kind of go, you know, well, I don't know a lot about tech, but I kind of understand it, right? And I think the challenge they have is interesting. There are some really good investments because not everyone's looking at them, all right? And they actually generally do a return. They actually are pretty successful. I mean, you know, software companies, I don't know what the percentage is, but I reckon that the hardware space is probably a lot higher. And they're, interestingly enough, they're even the ones that the big boys tend to acquire more often. So it'd be interesting, actually, because the business plan I saw last week, it was quite a considerable amount of money on a lot of R&D type information. They had an actual product, but they hadn't made any money. But if you've seen the numbers that were being thrown at it, it's like, wow, okay. So yeah, it could be interesting. It could be that, could be, you know, some people going down that route. But I think it's quite hard. You know, this is my thing, right? You know, if you had a startup years ago, 16 years ago, it cost you to even get a basic product, hundreds and hundreds and hundreds of thousands of pounds, right? And now the barriers have come down. But hardware is still quite a challenge for people just to kind of jump in and dive in the space. We're good? Thank you so much, everyone, for listening. Thank you.